Hi, welcome to the Market Alert for Tuesday, the 21st of November 2023. So yesterday, good auction, bad lees and ugly AI sustain Goldilocks gains in stocks and bonds. Not too hot, not too cold, just loose enough. And US stocks gained in quiet pre-trading Thanksgiving trade with gains led by tech as Microsoft shares climbed to record highs. And interestingly enough, talking of Thanksgiving, let me just bring this down a bit there so you can see I found this on the Market Watch website. An interesting article about here's the stock market's Thanksgiving week track record stretching back to 1950, and this is based upon the S&P and the Dow, or well, actually the source data is Dow Jones data, not the Dow Jones S&P. And up 49 weeks out of the 50, well, how many years it is, it's 50, so going back a fair while, that's 73 years. So up 49, Wednesday to Friday, up 60 out of the 50 years there as well. So you can see that yesterday is no surprise to see the market moving up. And this is, like I say, from the Wednesday to Friday, which is 2 half days and a day off, which is interesting, isn't it? So from Wednesday to Friday on the electronic markets, the Dow moving to the S&P moving to the upside. But as it says down here, I'll just scroll through this, but you should remember that it isn't guaranteed, and past performance is not indicative of future results there. So interesting stats though, up 68% of the time and 83% of the time for the Wednesday through to Friday, and 68% outside of that, so just for the total of the week there. Economic news today to help it along its way. If it's going to move higher, we've got monetary policy report hearings 3 p.m, then existing home sales. Lagarde's out at 4 p.m. and 7 p.m. FOMC meeting minutes, because tomorrow there's half-day trading. The Thanksgiving celebrations make a start. So let's have a look at the implied volatility before we move on. It's dropped down to 10.09. We've got a low there of 9.94. Interesting to be back down at this level where the market's moved higher. We had about a 70% increase, 80% area of increase in implied volatility for the last bottom. It's nice when we get over 100%. Would have been nicer, but again, we're back down and towards those lows. So again, after Thanksgiving this week, maybe we can look to see another correction coming in this market, unless they're going to continue the Santa rally. If so, that will push the implied volatility even lower, and we're not seeing it down at these levels for some 3 years or more. Actually, probably 4. I will double check on that. The lowest it's ever been is 7.49, I think, but we are going back a bit. I've got all the historical data going back 20 plus years, so I will get and have a look at that. Okay, let's move on and have a look at the markets, and we'll kick off with the Dow. So in the Dow yesterday, we managed to take out the 35,013, and you can see they're nicely done, down a bit overnight at the moment, which again you'd expect. Straight off the 230 opening, one direction off the market went and just kept moving along nicely. We've got the market below the close at the moment, needs to get back above the 20 bar moving average, but in the daily chart we've got another couple of targets above this, which you can see there. Just have a look beyond this. So yeah, looking at these numbers, let me just drag this over, see if we can find them. No, it's they're a bit too far to the left, but I'll get those numbers. First of all, you've got to take out yesterday's high, which is coming in at 35,226. So that's the first target price if the market can get back to yesterday's high, which you shouldn't have too much difficulty in doing. In the German DAX, still heading to the 15,991 or 16,000, the psychological level is where this market is likely to be gunning for. Above the 5 bar moving average, still parabolic, still moving to the upside. Market's fully intact and a strong situation with regards to stochastics and momentum to the upside there as well. And there you can see yesterday a bit of a sell-off in the morning, but the afternoon with the Dow soon bringing the market back up, and then today obviously going to attempt to try and get through the high, which it failed to do so yesterday, failing just below it there. Sideways overnight, above the DP and above the 50 EMA there as well. So again, all pointing to the market moving higher, but may need a bit of a shakeout to begin with. S&P 500, well, we've just seen the stats, again up yesterday, down slightly on the overnight, which you can see there, but closer to the high than it is the low, just needs to get back above the close. Yesterday, one-way bet all the way up, and yesterday morning also moving higher, a bit of a pullback, but yesterday, as the afternoon and evening, all the way, and again, the high is within target today. Meanwhile, in the FT land, stuck in the sideways range, nobody seems to be interested, maybe waiting for the autumn statement from the Chancellor, who's going to actually produce a Liz Truss budget that she had last year and was kicked out for, tax cuts, etc. The irony, eh? 30-minute chart, market down, and then you've got an 89% retracement. Tried to move up with the Dow, failed. You can see there just at the moment sideways, sitting on the DP. So Thanksgiving week is notoriously quiet. You tend not to get the sell-offs, so the market is likely to remain stable and sideways there. Meanwhile, in the US dollar, it continues to move to the downside, but it's not having much of an effect on the metals market, so let's have a look at why. So yesterday, silver managing to come back off the lows. So it's back above the 200 MA at the moment overnight, but not making any great strides. Yesterday, you can see that they continue to hammer the market down until we got the news yesterday lunchtime. If we'd had any news yesterday? No, we didn't have any news yesterday. So at 2 o'clock, for some unknown reason, the silver market was allowed to move higher, but it's started to make its way back down already. It needs to hold above the 200 MA there and the DP. Whether it can do or not, I suspect not. In the gold chart, heading back towards the $2,000 per ounce. Again, expect a monkey hammering when the market gets to that level. And in the 30-minute chart, you can see the move up yesterday for gold. Nice move there after a sell-off initially. So during the Thanksgiving week, they'll let gold move up to $2,000. The dollar is, the gold move up. Dollar is obviously, as I say, we've already seen, is moving down. They're not going to allow that for much longer. And also, we're FOMC meeting minutes tonight, but then again, there's no press conference to go with those. So again, they're not going to allow the dollar to continue to move and slide to the downside. They'll probably bring it back. Meanwhile, in the gold-silver ratio, there you can see that we've got this moving back to the upside. Bit of red overnight, but it'll continue back to the upside. They're not going to allow the price of silver to go beyond much further than where it currently is. Okay, let's move on and have a look at yesterday's basic trades. So not a lot to report for yesterday because the market traded very, very quietly in a sideways range. So let's just have a quick whiz through this. And there you can see we had a potential short, and then the market eventually trading through to the down to the below the DP. But we know when it gets down to this level, it's going to make any attempt to move back. And that's precisely what you see there. So you've got to be quick when you get a shakeout below the DP in the morning. The market will soon spring back. So then it just traded sideways, no surprise, and I'll probably expect more of this today as well. And then as the Dow came on stream in the electronic market, you'll see just before the opening of the Dow, the Dow in the New York 230, the market started to move higher, and that's how it remained throughout the rest of the session. So we had a V-shaped correction that we saw in the 30-minute DAX there. And that was it for yesterday. It was just the one automatic generated trade there. Let's have a quick look at overnight, see where the market is in the basic system. So in the 2-minute chart, so we can see a bit more detail here. We're currently below the close. Where are we in the bigger picture? How far are we off the high of yesterday? About 50 points. There's your high that the market will likely gun for, given it's Thanksgiving week. And in the daily chart, there's your other figures on the upside, 15,991 and then 16,045. But 16,000 will give the market a bit of grief, as it always has done when it's got to that level. If it can hold above, then it will continue, but if not, then it will reverse from that level. Okay, that's it for this one. Tomorrow we're going to be heading into half-day trading. Thursday closed, Friday half-day as well. So we'll see how we go on whether it's worth trading through these next 3 days or not. But we'll just have to see, particularly that we've got the flash economic news as well during one of those days. I can't remember whether it's tomorrow or Thursday, but we'll look at that tomorrow. Okay, that's it from me and this edition of the Market Alert. As ever, thanks for watching. See you in the next one.